Ooh, Legends currently getting a dump here to the downside, and we have just closed below the trend line here on the 15-minute time frame. So perhaps more downside is in order here for the price of Bitcoin. As per the thumbnail, are we topping out? Are we reaching the end of this bullish continuation here to the upside? And is perhaps a little bit of a cool down in order? It's never guaranteed, okay, that price is just going to continue momentum to the upside. And there are some technical things that you can look at that can give you hints that the top is close or near, rather. Okay, Legends, today we'll go and analyze the... Oops, let me just go and pause this over here. Right, today we'll analyze the price of Bitcoin. We'll go through some high probable scenarios. Welcome to the live stream, Lazy Friday. I know everyone's getting ready for the weekend, relaxing. Okay, so we'll keep it chilled. I'll go through the comment section. Hit the like if you enjoy the alpha over here. It's also your way to support the channel. Subscribe if you're not already subscribed for future notifications, where we keep things real, we keep things technical without bias, right? We purely look at the charts from a technical perspective, and based on technical analysis, we determine the highest probable shorting or longing opportunities. And as always, the purpose of this channel is not to provide you with fish and signals. It is, I've got some alarms going off here, but it is to enable you to catch fish for yourself so that you can be a successful trader without depending on anyone's analysis. Right, let me share my screen over here. Legends, that is what happened. Okay, I spoke about this level in our Legends trading community. One-to-one extension. Also, when you take a FIB here, I'm here on the local time frame, 15-minute time frame. Also, when you take a FIB from the high to the low, almost tapped the 786. Just want to see if we did tap it on the lock. No, we didn't tap it on the lock either. Right. But I spoke about this 1-to-1 to 1.236 extension over here because during my morning update here with the Legends Discord community, okay, this is the levels that we spoke about, right? I gave some analysis. I did a video update. If you'd like to join the Legends Pro community, first link down in the description to go and join. But basically, during this video, I shared that I don't trust if we're going to have a breakout here to the upside. Okay. Basically, I told the Legends, if you want to play the breakout from this trend, please be aggressive with profit takings to the upside, protect your position, and I will explain to you now why I didn't trust the breakout here to the upside. I didn't say we can't get the breakout. All I said is, if we get the breakout, be aggressive with profit taking, because now we're getting the dump to the downside, right? If you played the breakout and you didn't pay yourself on the way up, right, you now probably got stopped out at break even, or if your stop was below the low, you got stopped out with a loss. Always important to pay yourself on the way up. And I told the Legends this morning as well. And for those of you, the Legends that are in the live stream, welcome. You know exactly what I'm talking about. I told the Legends, it's not that I won't play the breakout. I will just be very aggressive with profit takings to the upside because it's never guaranteed that you're going to take the high. It's just never guaranteed. Okay. And there was two scenarios that I spoke about over here. I said, Legends, okay, when I take a FIB extension, let's just dive into this price action a little bit more carefully over here because, I mean, this is now relevant. Okay. This is what's currently playing out. When I take a FIB extension, let me delete it and do it again. Okay. A trend-based FIB extension, second tool in your toolbar, right? From the low to the high to the low, you can see that we tapped the one-to-one extension. Let me make it a little bit thicker so everyone can see it. We tapped the one-to-one extension to perfection. Okay, which I highlighted during my update to the community as well, as to say that I think my morning update, we didn't break out yet. And then I did another update to say, Legends, I do see some bullish CVD between these pivots. There's a chance to come and claim this high and go higher. Please be careful here by the one-to-one extension and the 1.236. The reason these two levels are so important because this is corrective structures, okay, targets. If this is not impulsive, it is corrective, which means you can still reject here and fall down, which we did. And that's why it's important to pay yourself as a trader. Okay, so also what I highlighted is to say that let me just take the scribble out here, is that I think we were trading over here when I did a second update and I said, legends, there's a chance. Okay, we have nice bullish CVD against this pivot, and even as price was falling down here, there was more bullish CVD building up against these two pivots. And I said, potentially, yes, we're going to get the breakout. Okay, I do see this area as a potential, how can I say it, profit-taking area. Please take profits when you hit this zone and leave some of your position open, okay, to potentially go and claim the high. But the probabilities for me was still low that we're going to go claim the high. But I did say the market is here to surprise us. You just never know. I would be very, very surprised if price had to break out here and just continue to the upside. And I'll explain to you guys in a moment why I would have been very surprised. Okay, so what happened here for me actually makes more sense from a technical perspective, is that you had the fall, you had a correction, and now you continue the momentum here to the downside. And then we'll go and analyze, well, where is that highest probable bouncing area for another long back to the upside? Okay, so there was a nice long here. Okay, for those of you that did get into the short over here, it wasn't easy, but it was a rejection zone. Nonetheless, we got the dump here to the downside. And now we'll analyze the price of Bitcoin on a little bit larger time frames over here. Mr. Scoot, welcome. 𝗬𝗍𝘆𝗽𝗍, let's go. Thanks for joining the stream. Blessed day, everyone. Cosmo, welcome to the stream. Frank, good morning, 𝗬𝗍𝘆𝗽. Mr. Crypto Big Brains, thanks for joining. Appreciate the support. Maxian, hi, everyone. Good analysis, very good analysis earlier. Perfect. I'm assuming you are inside the Legends Trading Discord community. Okay, nice. Thanks for joining. Right, Legends. So, I mean, I've now explained the more local here on the 5-minute time frame what I was looking at over here. But let me tell you guys why I thought, okay, what gave me the confidence to say that if we get a breakout, I don't trust the breakout. I said it a couple of times during my update this morning. I was just like, what? I even thought to myself, why are we getting the breakout? Okay, maybe making people bullish, right? Everyone longing, adding more liquidity here to the downside, and then you have this fake out, and then, okay, then we dump to the downside. But it didn't make sense to go higher. Okay, let's zoom out a little bit and let me take you through the why. Okay, let's go on to the 1 hour over here. Just clean up the chart a little bit, take the fibs out the way. Okay, I have spoken about this quite a couple of times already, especially when we were inside of this. Let me just load up inside of this structure. Okay, we're inside of this structure. Yeah, there was quite a couple of them. I'm just checking over here. Yes, there was a couple of them over there. And there was many of them during this structure over here. Okay. Do you guys remember me talking about 3 peaks to the upside or 3 peaks to the downside? Okay. Usually, and I'm just going to use a couple of examples over here, is that when you have 1, 2, 3 peaks, okay, and you look at your normal RSI, not just stochastic RSI, normal RSI. So I'm going to hide this one because I actually don't use this one ever, is that when you form 3 peaks to the upside and RSI are making lower highs, okay, usually it's a sign for a reversal. In most instances, I've many times seen 2 peaks, and I've many times seen 3 peaks where RSI moves down. And I know if someone specific, I know he's going to join the stream and he's going to tell me, yes, 𝗬𝗍𝘍𝗽, we always talk about this. Okay, you get a reversal, right? Even on the smaller time frames, inside of this area over here, if I zoom into the smaller time frames, you will also see there was 3 peaks, lower RSI on the 15-minute, 5-minute time frames, we fell down. There was many examples during the structure. I need to zoom into smaller time frames, but I'm going to lose my spot over here. Okay, so, but I've made the point. Now, what happened over here? This is what I was looking at, okay? Looking at the structure where we are now at the moment. When I zoom into this structure, you can also see 3 peaks to the upside. 1, 2, 3. RSI moving down. Okay, that is what I was looking at. Usually, I don't think I have ever seen, maybe it has happened. I'm not saying it hasn't happened, okay, where you get 4 peaks, 1, 2, 3, 4, and then price falls around. Okay, maybe it does happen. I just don't see it often. It's usually at the 3rd peak, if not by the 2nd, that you get the correction back to the downside. And okay, so that's basically what happened. So based on my technical analysis, when you have 3 peaks like this, chances are you're going to cool off a little bit to the downside before you continue momentum here to the upside. So when I was tracking this momentum from a trend line perspective, I was just like, I think we're going to make a lower high and we're going to smack back down. I mean, nothing is ever perfect from a technical analysis perspective, but when you have 3 peaks specifically with RSI making lower highs, you increase the probabilities that you are due for a little bit of a cool off to the downside. Okay, so there was 3 peaks, but they also play out on smaller time frames, because I also shared with the legends this morning that I was also on the 5-minute time frame. If I zoom back here onto the 5-minute time frame, it happened again. Okay, yeah. Can you guys see, right? 3 peaks, 1, 2, 3, RSI making lower highs. You fall down. Okay. So they play out on the smaller time frames. They play out on 15-minute, 1 hour, 4-hour daily time frames. You always see these 3 peaks with lowest RSIs, lower RSIs, lower highs on the RSIs, higher high on price action, which is referred to as hidden bearish divergence. Okay. But it's the 3 peak one that really interest me, because the probabilities of a 3 peak reversal is higher than a double peak reversal. Okay. So now, what are the trading setups that we're looking at now? I think I've driven the point across based on the 3 peaks that I saw over here. Okay. 1, 2, 3. It just feels like we need to cool off a little bit. Okay. Maybe I shouldn't use the word feel. Technically, okay, it makes sense to have a little bit of a cool off, right? And I'm not saying we can't bounce here. Maybe we bounce here, we make a lower high, right? And you smack back down. So the highest probable scenario that I'm looking at right now is, let's go back here onto the 15-minute time frame. Welcome, legends. I see more people joining here the live stream. Welcome, welcome. Destiny Focus. Hello, legends. Please show 𝗬𝗍𝘆 some thumbs up. Thank you so much. I appreciate that. Sin Games, welcome to the live stream. Rudy, welcome, welcome. Ling, welcome. And I think I've gone through all the comments at the moment. Thank you so much. Okay, cool. So let's now analyze the next probable trading scenario. I just want to take all these scribbles here out the way. Okay. So I want to go back here onto the 1 hour time frame and just look at this structure. Okay. We cannot deny that we've had nice little impulsive waves here to the upside. Okay. And inside of this structure, we have a low, we have a higher high, higher low, higher high, higher low, and a higher high. Okay. So definitely still a chance to make another higher low and another higher high. That makes more sense to me, because after the 3 peaks that we see over here, okay, you want this impulse to correct itself a little bit. Okay, you could also argue that there's 1, 2, 3 peaks over here as well, right? Where we could have a deeper correction that's now going to correct this entire structure. But for now, okay, there is still a potential for a bounce over here, right? Maybe the time is not now for the entire structure to be corrected. Maybe only this structure needs to correct itself for now. So what I'm currently looking at is, I just want to switch on some trends and some analysis over here. Okay, so obviously we have the trend here to the upside. Okay, I can actually take this one out because I've already spoken about it. I don't need it anymore. And now you can see that we're kind of in a wedgie structure here to the upside, which is referred to also as a bearish pennant. Okay, any flag or bull flag, whatever you want to call it, that has momentum to the upside, especially if it's contracting, usually has a higher probability of breaking to the downside. Okay, we all know that. Also, from an Elliott wave perspective, there's also the possibility that you can make a higher low and continue the momentum here to the upside, where this is considered or regarded as a contracting leading diagonal. Okay, so what I'm looking at over here is to say that this entire structure can definitely be three wave structures here to the upside. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Back to the downside. It can be a combination of three wave structures as well, right? But I don't care if it's 5-wave structures or 3-wave structures. I just want to be able to trade the next highest probable scenario. And that scenario for me is, okay, remember when we spoke about this low over here? Okay, beautiful tap on the trend, and we got nice momentum to the upside to go and claim the high once again. And potentially this can play out again. So the next highest probable bouncing scenario that I do see, as always with good risk management, is when you take a fib now from this low to this high, because I'm measuring this impulse. Okay, these impulses already played out. There's a 0.618 level that I am very interested in over here. And the reason I am interested in the 0.618 level is because there's confluence at the 0.618 level. If I switch on my point of controls and I also take a fixed range profile from this entire area that we've been ranging in at the moment, this is where the planets starts aligning for me over here, is to say inside of this entire zone so far, we have a point of control. What is a point of control? Point of control is where the most amount of volume was traded. You can see the volume over here. Okay, least amount of volume, most amount of volume. So there's a wall of volume over here at the point of control, which usually gives you some sort of a reaction. Okay, usually you get a bounce at least at that level. So if price had to fall down here, you could definitely get a bounce. It's just never guaranteed that you're going to take the high. And this is why you need to know exactly where to take profits and pay yourself on the way up. Because you could, okay, come back to the area of resistance over here. You see the belly resistance over here. Make a lower high and continue the momentum to the downside, where this is going to be another three-wave structure to the downside. But I do see this area as a potential bouncing area. It can definitely be the bounce that claims the highs, but it can also be a bounce that gives you a lower high and continuation back to the downside to come and tap the bottom of the range once again. Because there is that saying in trading that says, if you look at the range over here, let me just take the scribble out. When you look at the range, okay, the value area high, the value area low, when you gain acceptance back inside the range, like we have now at the moment, you increase the probabilities that you are going back to the point of control. And if you lose the point of control, you're going back to the bottom of the range. Okay, so the maximum target that I'm expecting over here is the 0.786. And what I would like to see from the 0.786, I mean, these are just trading plans that I am anticipating so that when we hit that level, I know I'm going to be looking for a long opportunity. Okay, so it's all about having a shorting plan from a shorting perspective or a bearish perspective, and a longing plan from a longing perspective, because unfortunately, no one can predict the markets. But if I have levels of confluence where I'm planning to long, because there's confluence, there's a point of control, there's another naked point of control inside of a small consolidation area over here on the 5-minute time frame. It's a 0.618. It's also in confluence with diagonal support here at the moment. So it really does look like a high probable bouncing area here to the upside. You bounce on the trend, point of control, naked point of control, and potentially an SFP could give us that upwards momentum. If we lose this area, right, I don't see what I like over here. We close high time frame candles below those levels. I would then say, okay, next stop is the 786 together with the value area low of the range, okay, where you want to see a deviation. So maybe if price falls down, we get a deviation and you get acceptance back above. Once you get acceptance back above, okay, you can potentially get a rejection at the naked point of control and continue, or you can get acceptance back above and come back to the top of the range. So that is how I'm planning to trade this range. Okay, you trade the range until there's no more range. And at the moment, we are inside a range. We're struggling over here to take the highs. And it does make sense for us to get a little bit of a cool off here to the downside. But this is the zone. Like this was the zone. This is the zone that I'm watching. $56,800. Give or take, the levels might slightly different depending on which exchange you use to do your analysis on. Okay. What else? Let's go through some comments over here. Welcome back, Sin Games. KC35, welcome, welcome. Do you see the same for the 3 lower lows? Yes, it works in opposite, right? You can reverse this. So if you have 3 peaks to the downside and you have RSIs making higher lows, it then reverses price back to the upside. So it happens both ways. So you can look for the 3 peaks to the downside and you can look for the 3 peaks to the upside. The probabilities are exactly the same. Is the like button broken? I'm not sure if the like button is broken. Okay, let's go, and I just want to zoom out here. Let's go check over here. 87 people watching the stream at the moment. Let me just refresh. And I've got how many likes? 40 likes. 40 likes. Yes, maybe the like button is bearish today. I don't know. Maybe maybe it's bearish today. Okay, legends. Also, what I wanted to highlight quickly here, down in the description, remember that 10% cashback on Bluffin. There's been such great demand for the special, and some people, saying that they didn't benefit from the deal. Can we not maybe extend it? And that's exactly what we did. So we've extended this cashback deal, and I don't have it open over here, but it will last for another week. Okay, I will get you guys the exact time frame, but this 10% cashback deal, by using the link downstairs to sign up, or if you're an existing user that already used the link, by depositing money into your Bluffin features account, you get 10% cashback on that money. Okay, for the people that participated in the previous 10% cashback, it takes about 2 to 3 days, and then the money will be airdropped into your features account to trade with. You can use it for fees, keep the profits, and if you lose it, you don't lose anything. You don't lose any of your own capital. Okay, so go take advantage of this deal at the moment. Okay, cool. So, legends, high, long probable scenario that I'm looking at over here is this zone. Okay. A little bit further down, I do not want us to come back to this zone. You really want to see a higher high form over here, because if you're going to fall down here, okay, and you start tapping this point, you're starting to change local market structure. That's why I don't like us, the 786 needs to hold over here. You want to see that higher low for continuation back to the upside, if we still have a chance to come and claim this high before we make a deeper correction here to the downside. Okay, so for now, the trend is up. Technically, it's not because I feel like it or I'm saying, hey, okay, we are definitely going up. I'm saying technically the momentum is still to the upside. Technically, we have higher highs and we have higher lows. If we come back down here, there is still a potential for a higher low, for continuation, to make yet again a higher high. Definitely still a possibility. Okay, so we need to pay attention and we need to play what the technicals are showing us. If we fall down here, right, and you lose this area, like I've said, when we were trading over here, and I highlighted this area, if we break this support, okay, then we're starting to change market structure. You break the low, you make a lower high, and you can continue the momentum here to the downside, where you're now making lower highs, lower lows, lower lows, lower highs. Okay. Hope that makes sense. I'm trying to keep the technical analysis as simple as I possibly can over here. So that is basically what I'm watching here on the smaller time frames. 1 hour, 15-minute time frame from a local perspective. Okay. As always, I know that I've highlighted this level for potential bounce, okay, before potential bounce. But we also have to just play out that low probable scenarios, but what if, okay? If price just finds the strength to reverse over here for some reason that unforeseen reason and we start shooting up here, I will still consider this high, okay, as an SFP, where you'll maybe have 4 peaks, okay, maybe another lower low on the RSI or a lower high on the RSI. I will still consider this peak over here as an SFP, where you could, like we SFP'd over here, okay, you claim the high, you fall down. Also over here, you claim the high, you fall down. I will still consider this level an SFP, where you're basically tapping the top of this trend that I've connected here with the highs, okay. If you come back up here and price slices back down, showing weakness, it gets acceptance back below these levels. Okay, for me, that is a shorting opportunity that I will be keeping an eye on. So we just have to play out all the probable scenarios. For now, the highest probable scenario is to still move down. Okay, but we just have to play out the what if scenarios. Also, what I'll be watching over here is to say that, well, if we do bounce, let's say we play out price action. Let's say we get the bounce over here. We get acceptance back above, right? And we're off to the races. I'm still going to look at this high as a potential SFP, because this could be a larger contracting diagonal. And the rule for the contracting diagonal states, okay, maybe this is a 1, 2, 3, 4, 5, A, B, C to the downside, where you will then lose this channel. You'll make a deeper correction here to the downside, and hopefully, okay, we will form a higher low compared to this low, because this correction could now correct this entire structure over here. But looking at it right now, it looks like the structure is not finished. We still have unfinished business here above this high for now. So I would like to see a higher low for continuation. And then I would say, once we've made the three bigger peaks, these are the 3 bigger peaks that I'm looking. See, it all comes into confluence when you start looking at it like this, is to say that you have a peak, okay, you have a peak, and what if you have another peak, and then you have a larger correction to the downside. So you have small peaks here in the smaller time frames, which basically is correcting this structure. This correction is for this structure. But once I see 3 peaks over here, okay, definitely a chance for a larger correction here to the downside. Right. Cool. Okay, so let's take all the noise here out of the chart. Legends, if you have any questions, make sure you add them to the chat. Yes, please ask away. You have a theory. You have theory after theory. Stay calm. I have many theories, right? But I play the confluence areas, okay? And like I played the long over here, okay? Like I played the long over here, I'm now speculating on the next long area. Okay, it's as simple as that. From a trading perspective, we just have to have levels of confluence, set your alarms, and when your levels get hit, you make a trading decision with good risk management. That is how you trade as a day trader. It's as simple as that. So I have a long plan, and I also have a short plan. Okay, and based on what price action does in these zones, I will make a trading decision, and with good risk management will either enter a long or a short based on the price action that I see when we hit these levels. It's as simple as that. Okay, that is how you trade as a day trader. And you cannot just have a long plan or just have a short plan. It's always good to have both a bullish and a bearish case scenario. Set your alarms so that whatever the market offers you, you have a trading opportunity that you can participate in. Okay, so let's take out the noise. I just want to see if I zoom in here onto the 4-hour. Okay, switch off the point of controls. Let's clean it up a little bit over here. Okay, switch off the trends. There's a couple of scenarios that I think has still a possibility of playing out. The first one I want to highlight is, let's go on to the 12-hour, and I just quickly want to talk about this scenario. Just a quick recap on the larger time frames. Not that one. That's local. Local. Sorry, legends. I just need to find it. I did work on it this morning. Okay, here we go. This scenario, okay? So we've been in this correction since March. We all know it, right? March. That's where we made the all-time high. so far. Okay, I need to go and delete that trend from Ethereum because it's irritating me. Let me just delete this. Okay, let's go back here onto the price of Bitcoin. I also, by the way, I played this breakout here on Ethereum. I took profits by the high, out of the trade, made my profits, happy. Okay, so you see, you can still make profits. I played the breakout, took profits by the highs, out, in and out, right? My stop loss was so tight here below this consolidation area on ETH. I decided not to trade Bitcoin today. I traded ETH instead. It just looked more obvious to me from a trading perspective. So we are still inside of this entire correction, okay? And it looks like we have a W, beautiful WXY, okay, that can still be forming over here, and where the Y wave is basically ending in a triangle. So this scenario still carries probabilities where you have a three-wave structure to the downside, a three-wave structure to the upside, and a three-wave structure to the downside. Now what you want to see is another three-wave structure to the upside and another three-wave structure to the downside to go and complete the E over here, where you basically have the A, B, C, D, E. And the rule for this scenario is D point is not allowed to take the high of B point. C point is not allowed to take the low of A point. That is why it is a triangle. That's the rule for the scenario. It's not allowed to do a fake out and go and take. If price falls down here and it does this, the scenario is invalidated. It's not a W, it's not an A, B, C, D, E anymore. It's something else. Okay. So for now, this structure is still respected, okay? But what you would like to see is this needs to be the low, okay? This is the C point over here, okay? The blue C, this is the C point over here. So now what needs to happen from the price of Bitcoin is it needs to make a lower high compared to this one, or this one over here, a lower high. It needs to make a higher low, right? You're forming that triangle. Can you see you're forming the triangle? Once the D is in, you then expect momentum back to the upside, where we could potentially go and claim the all-time highs, right? It's definitely still valid. It has not been invalidated. So this is the scenario that I'm keeping a close eye on. If price falls down and we claim the low, you'll see I have an invalidation. This is my invalidation. If we claim the invalidation, this scenario for me is no more. It's out the window. But for now, it's still intact, and I have an invalidation. And this is how I play out my scenarios. I have multiple bullish and bearish scenarios with invalidations. And I can actually do this as well. Clone. This is my invalidation to the upside. So let me just explain, okay? From where price is at the moment, if price shoots up here, the scenario is invalidated. It's something else. I will have to go and look at another scenario. If price falls down here, it's invalidated. It still has, we have the C, we still need to complete a D, lower high, and we still need to complete the E, higher low for continuation here to the upside. Then it can break the line. Perfectly fine, okay? But I want to see the structure complete over here. So just from a macro perspective, I just wanted to highlight the scenario just to say, legends, guys, it's still intact, okay? We can still complete a triangle over here in the Y wave and then continue the bull run here to the upside. And this can still take up until the end of October, okay? Definitely, it can still be up until the end of October, maybe the beginning of October, but I do see this possible reversal in the month of October, November from a timing perspective. Okay. Then I want to go on to the 4-hour time frame, take this scenario out the way. Another scenario that I'm looking at is, let's talk about the bearish scenarios over here. Okay. Before I get to that one, let's rather talk about the bearish scenarios over here. Okay. So this is one of the bearish scenarios that I just quickly want to go through over here. Okay. So do you see that we still have in orange, look at the orange lines where we could be forming a WXY. If we are going to form a Y wave here to the upside, okay, you can see that it's going to hit the invalidation of the previous scenario that I've just shown you, where this momentum here to the upside is not allowed to take this high. So if we have a WXY here to the upside, there is still a chance, because you're going to invalidate this one that I showed you to then break out to the upside, and you could still fall down. Okay, where this is a larger WXY to the upside. Very bullish. Okay, it's going to make a lot of people bullish here to the upside, and then it smacks back down. So the orange scenario is definitely still in play. Okay, the gray scenario that I have over here, let me just do this. Okay, let's focus on the gray scenario over here. For me, has now been invalidated. Okay, so we have been talking about this gray scenario where we're forming a WXY and we're going to start falling to the downside to go to $42,000 potentially. Okay, this scenario for me has now been invalidated. And now you might be asking yourself, well, why has it been invalidated? Because after you complete the Y wave over here, you want to see impulses to the downside. Okay, 1, 2, 3, 4, 5. Price moved too high already. And I'll be honest with you guys, this structure looks incredibly corrective. It does not look impulsive. This looks like a three-wave structure, a WXY. And the reason it looks like a WXY is because it also hit very common corrective targets. Is if you take a fib extension from the high to the low, to the high, we have tapped the 1-to-1. We have tapped the 1-to-1, okay? If we had impulses here to the downside, you want your third wave to be minimum here by the 1.618 before you have a retracement to the upside. And the fact that we turned around so early tells me that this can definitely be a WXY, well, Y here to the downside. So this scenario for me has been invalidated. So I'm going to delete it. No longer valid. Okay, which is actually good news for the bulls, by the way. This is really good news for the bulls. Okay, then another scenario is a leading diagonal. Okay, I just want to highlight it is still very early to call for a leading diagonal, and because I usually really only like to talk about leading diagonals of this magnitude once 4 is in. Once the fourth is in, then I actually like to talk about it, but it's something to keep in the back of your mind. I have it in my folders. If the scenario plays out, then by all means, is where you have a continued three-wave structure here to the upside. You have 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. You make a higher low without taking this low, and the bull market continues here to the upside. So definitely a scenario that we need to keep an eye on, because and the reason I'm keeping an eye on this scenario is because all of these structures are three-wave structures so far. 1, 2, 3, 1, 2, 3. They just also three-wavy at the moment. And the rule for this structure, because these are three-wave structures, all of these structures has to be three-wave structures. As soon as you see a 1, 2, 3, 4, 5, then the scenario is invalidated. Okay, it has to be three-wave structures. And we have a three-wave structure here, and we have a three-wave structure here. Now we need to make a third wave. We come back down for a fourth wave. We go back up for a fifth wave, and then we make the larger ABC. You finish the leading diagonal, and then you can expect an explosion here to the upside in a third wave. But still way too early to call, legends. It's very early to call. Okay, so maybe in 10th of October, around about the 10th of October, mid-October, if the fourth wave is in, okay, and we have made three-wave structures here to the upside and a three-wave structure here to the downside, I'm going to tell you guys, okay, this scenario is starting to carry high probabilities. At the moment, the scenario carries no probability unless the fourth wave is in the structure that I've currently drawn over here. Okay. Also, the invalidation for this structure is a 5-wave here to the upside, okay, or taking the low here at number 2. If we take the low here at number 2, that's an invalidation of the structure. And if we make a 5-wave structure here to the upside, invalidation, okay. Then we'll look at other scenarios. So I think it's just nice to plan ahead and see, well, on the 4-hour, on the daily, where could we potentially go? It's always very interesting, okay. That is what in Gustavo. 1, 2, 3, 4, 5, 47K, then moon. 47K, yes, definitely a possibility. 47K, 47, right? So you're saying we're just going to take the low over here, and I would just be interested to see based on which scenario do you think we're going to go to $47,000, right? I'm always curious when people give me a number, based on which scenario do you think we're going to hit that level, right? Always interesting. Please go and join our Discord Legends community. Share your charts with me over there, right? If you go down here on the description, the first link down in the description, not that one. What did I do? Okay. First link down in the description, this one. Okay, let me just click on the right place over here. You'll land on a page where we have a free Discord community and a Legends Pro Discord community. So in the free section, please, by all means, go and share your charts. Okay, if you're seeing a scenario that I'm not aware of, please share it. We're all here to teach to learn together from a trading perspective. Okay, there's also the paid community where I do daily updates, myself and Andy, also one of the coaches inside of the community. Right, and that 10% 10% deal is still on the table. It's been extended for another week, so go take advantage of that deal. Okay, legends, these are basically the scenarios on the higher time frames, or this is, I would say, mid time frame that I'm keeping an eye on. On the daily time frame, I have gone through that scenario. So let's go through a couple of comments over here. I think I've said what I wanted to say here on the price of Bitcoin. Not much else at the moment. Okay. Lower high, higher low, higher low. Nice song. Yes, maybe I should make a song about higher, higher, higher lows, especially with me always mixing up the higher highs and higher lows. Okay. Yeah. Yes. Can you do wave count on the 1 hour waves? Or in no. How in another high possible? Okay. So did I not explain it during the beginning of the live stream? Okay. Let's go here onto the 1 hour time frame. Okay, so the one scenario that we were looking at over here is, let me grab my counter over here. Okay, 1, 2, 3, 4. You want 5 to be a bit lighter. This looks very truncated to me. So is this the fifth wave? Okay, we are now going to make a deeper ABC to the downside. It's just from a fifth wave measurement perspective, what I don't like about the fifth wave ending over here, okay, it looks very truncated, and truncated basically means that 5 potentially didn't take number 3, which it did actually. But I mean, from a minimum target perspective, usually how I calculate the fifth wave target is you take it from the top of 3 to the bottom of 4, you drag your FIB, you reverse it, and by the 1.236 and the 1.382, okay, in this zone is usually where I like to see a minimum fifth wave target, which we did not tap. Okay, but this structure here to the upside counts very difficult as a 5-wave structure to the upside. And what I mean by that is that each wave, okay, each one, the 3 and the 5 has to have 5-wave structures to the upside. You have to count 1, 2, 3, 4, 5. You have to count 1, 2, maybe 1, 2, 3, 4, 5, an extended fifth wave here to the upside. So even this structure is starting to count very difficult here to the upside. Okay, it looks really 3-wavy to me. Okay, so questionable. Maybe on the 1 minute, 5 minute time frame, I'll be able to force count 5 waves inside of the third wave. Now, what on earth is this? I cannot, for the love of me, count 5 waves inside of this structure. And for that reason, okay, I feel that this scenario carries lower probability. It's not a 1, 2, 3, 4, 5 anymore. I think it's something else, okay? More like a diagonal, because, you know, impulsive structures in Elliott wave theory, ironically, are the easiest structures to count. Impulsive structures are the easiest by far. It's corrective structures that are difficult, okay? So from an impulse perspective, you want to see an impulse, 1, 2, 3, 4, 5, where 4 is not allowed to go into 1. You want to see clear 5-way structures to the upside, maximum FIB retracement from the low here to the high. It shouldn't go into the 0.618. It's a maximum target. So 50%, 382, nice bouncing zone, not allowed to go into the territory of 1. That is a clear impulse. Okay. If it is not an impulse, then it needs to be something else. Maybe it's a diagonal, where the waves are allowed to overlap and you can have 3-wave structures inside of it. Okay, where you could potentially have a 1, 2, 3, 4, 5. Okay, that makes sense, and this is why I'm starting to discuss diagonal structures. So when I switch my trend lines back on here, what could definitely play out over here? Okay, let me do it from fresh, just to show everyone, well, how do I put this together? Okay, we have a trend here running up. I'm going to take that out the way as well, because we can dive a little bit lower, take a fresh trend. Okay, you just want to see a contracting diagonal. You connect the highs. Okay, it has to be contracting. You do get expanding leading diagonals, but they are very rare in Elliott wave theory. So your preference is a contracting diagonal, because they are by far more common. And what you would like to see inside of this structure now at the moment is, because I cannot for the love of me count 5 waves up here, okay, that follows the impulsive rules. I mean, if this is 1, 1, 2, 3, 4, 4 went into the territory of 1, okay, what is, it doesn't make any sense. It has to, and this is now why I'm looking at a contracting diagonal up here, is to say that, well, maybe this is a 1, 2, 3, 4, 5, then we make a correction and we continue the momentum here to the upside. Okay, and all of the structures inside here needs to be 3-wave structures, because I cannot count 5-wave structures inside of this structure at the moment. It looks very 3-wavy, so you want to see a 3-wave structure down, 3-wave structure up, 3-wave corrective structure, and continuation to the upside. So that's basically how I'm counting it at the moment. Okay. 1, 2, so let's just put some waves in here. 1, 2. Can this be the 3? 3, 4, 5. And then you want to see a larger ABC, WXY. Doesn't really matter. The most common correction is a ABC. Okay. And to play that out, you come back down. You do not take the low. Maximum target, what that you would like to see tapped, is when you take a FIB from the low to the high that we've made, 786. Okay, because if you tap, you can now imagine, if you come down and you tap this, let's say the maximum target of the 786, and I take my FIB, I still have a contracting diagonal. If you start dancing around here, the 0.8, or you take this low, then you have an expanding diagonal, which is very rare in Elliott wave theory. And Elliott wave theory states an expanding diagonal only gains probabilities when all other scenarios fail, okay? And all other scenarios have not failed yet. So this is why I'm looking at this contracting diagonal. We're either going to get the bounce by the 618, okay, where you can drag your contracting a little bit up, or we're going to get the bounce here by the 786. So I'm saying that looking at the structure, we still have a chance for a bounce in the zone, where we have a 1, 2, 3, 4, 5 USFP from the highs. The 5th wave is allowed to overshoot, okay, but you're going to get acceptance. You want to see acceptance back inside the trend for a short opportunity. That's what I'm saying. This is a short opportunity for me. This is a long opportunity for me, where you come back down for a larger ABC, where you break outside of the bearish pennant, because a lot of pattern traders, they see this, oh, it's a bearish pennant, we're going to go down to $42,000, okay, only to be a leading diagonal, where you make a higher low, let me just get that right, higher low, and then you have an explosion back to the upside. Okay, so this is how I'm counting the structure at the moment. For me, that has at the moment the highest, well, not the highest probability, still a probability. Okay, trade on Bluffin, yes, go benefit from that 10% cashback deal. Morning Devil, Ghost Levi, welcome to the stream. Okay, do you take into account the liquidity map? Sometimes I do. I'll be honest with you, Maxian, I like to look at liquidity. Let me go through it here at the quickly, okay, on the 24-hour and 12-hour time frame. I very seldom go into higher time frames because I want to see more locally, okay, where the most liquidity is. So more locally, you can see we have more liquidity to the downside. So I don't trade liquidity. If I am, for example, planning to take a short to the downside, so let's play this out, okay? Let's say I took a short here, as SFP from this high over here, okay? Whoever got into this SFP, beautiful, okay? You got nice momentum to the downside. You have not claimed the high yet. And now you go look at the liquidity heat map on the 12-hour time frame. You can see, okay, there is significant liquidity down below. So the probabilities is just slightly higher that we could continue that momentum to the downside. But I don't trade the liquidity heat map because I've seen many times you have liquidity to the upside. It just scrapes past, doesn't grab it, and then you fall to the downside. So I don't trade liquidity per se. I just use it as another layer of confluence. So I've entered the short. I don't look at liquidity when I'm entering the short. Okay? That's not what I do. I trade my strategy. And then when price falls down here, I say now based on a probability perspective, it looks like we can still fall down a little bit lower based on liquidity. So it's just something nice to look at. I think that's the best way to say it. I don't trade it. It's something nice to look at. Okay. Because there's been many times where we have, I mean, if you start zooming in here and on the 48-hour, for example, okay, let's just go look at it. There's more liquidity to the upside. Okay. Now, if you're trading liquidity heat map, you might say, okay, I'm entering along. And then price keeps on falling down. Doesn't make any sense, okay? It doesn't have to grab that liquidity yet. You have to remember what the market makers do, okay? Let me grab a blank piece of paper over here. What the market makers do, if price is ranging and there's very little liquidity to the upside and very little liquidity to the downside, often what market makers will do, they will keep on ranging the price without grab, like literally you just miss the liquidity over there, okay? They will often do this, okay? Like they create that panic almost, and then you fall down again. And then just before you hit the liquidity, you turn around so that more liquidity can build up. Because you can just imagine if you come up here, you don't tap the liquidity and you start turning around, then shorts starts entering the market. And where do they put their stop losses and their liquidations? Above the high. Then you fall down, okay? And you turn around just before the liquidity and you start breaking market. Maybe there's some, local market structure that gets broken. You make a higher high. Everyone starts longing again. More liquidity builds up. So what market makers wants to do is they want significant liquidity to make the move worthwhile. And when, I don't know when it is, when they've decided there's enough liquidity built up either to the up or to the downside, they will go and grab it. Okay. And they might even do this, where you get that V-shaped recoveries. We've all seen them before. Okay, when there's enough liquidity, they will break out of the range. That's your bull flags, whatever the case might be, and they will go grab the liquidity. Take all the scribble here out the way. Any other questions? There's a really good question. Okay, so for now, here on the 15-minute time frame, we did speak about the highest probable scenario here on the smaller time frames, where I'm still looking at naked point of control. Just in summary, okay, also from this entire range, point of control of the entire range. I mean, it's not exact, but it's a nice tight zone, okay? It's a nice tight zone over here where I'm looking for potential long. I'm not saying I'm definitely longing. I'm going to set my alarms, okay? Based on the price action that I see, I will make a trading decision. Or we come back to the bottom of the range, okay? And I'm looking at a maximum target of the 786. Right. These are the trading long opportunities that I'm currently waiting for. And we have to acknowledge that we are currently trading below the value area low. And you can see we broke down. We already retested it. Okay, the scene of the crime. And it looks like we could continue the momentum here to the downside. From a front running perspective, I always keep the front running in mind as well. Okay. Maybe, okay, there's going to be a lot of people waiting for the zone for a long. What if? Just what if? Okay, you have a pump to the upside. I've spoken about this often as well. You have a beautiful pump here to the upside. You form your first range low. Okay, there's your range low, just above the 50% fib level. Usually, when you tap the range low for the first time, one of two things happen. One of two things. You tap, I call it the tap and go. You want to tap it and go, and you don't touch that level again. If you touch that level for the second time, you increase the probabilities of coming to fill the inefficiency. Okay, so this could be a tap on the 50% fib level and go, right? Or you close high time frame candles like a 1 hour, preferably below this level, and you increase the probabilities of coming down lower. You don't have to fill the entire inefficiency, but usually around 50% of the inefficiency is good enough. So here by the 60%, and there's this nice little consolidation area. I'm not sure if everyone can see that. Okay, so on the 15-minute, maybe not so much, but if I zoom in here onto the 5-minute time frame, consolidation areas can provide support. Okay, you can see here there's a nice consolidation area over here. That's where that naked point of control is. So if price had to fall down, okay, nice consolidation area. Okay, I hope it doesn't front run. That's my front run area. You tap the 50%, you get acceptance back above. You know what happens? There's a possibility. You front run this area, okay? You leave the traders behind. The alarms don't even go off. So I will definitely have an alarm at this low. Definitely I'm going to have an alarm at this low, and I'll have some alarms in this zone over here. So there can be a front run. There can be a perfect bounce on the level that we are all watching, and there can be that scary moment, oh, we're going down to lower levels, and then you get the bounce to the upside. Okay, so these, I'm looking for longs in these zones. I've got my plans ready. I've got my alarms, and when price hits those levels, I'll make a trading decision. Okay, cool. Thanks, legends. That's unfortunately all I have time for today. Thanks for being on the stream on this Friday, getting ready for the weekend. Please take a break from the charts, especially on Saturdays. Saturdays are known for very boring price action. Take a break from the charts, switch off your computer, close your laptop, go spend some time with family and friends, reset your brain so that when you start trading and preparing on Sunday evening or maybe on Monday, you are fresh and you've reset yourself a little bit. And then, legends, until the next one, cheers for now.